XRP ETF approved? Here's the real reason the SEC just blinked. The Ripple versus SEC lawsuit wasn't just another crypto skirmish. It was the war. The kind of battle that defines an entire asset class. The kind of war where one ruling could set precedent for how every blockchain project in the United States would be judged going forward. And in the middle of that war sat XRP. Not just bruised, not just delayed, but deliberately targeted. For over 3 years, XRP was dragged through regulatory hell. The SEC's goal was crystal clear. Make an example out of Ripple. Paint XRP as an unregistered security. Use fear to control the narrative and freeze innovation in its tracks. And for a while, it worked. XRP was blacklisted. Top exchanges like Coinbase and Kraken delisted it. U.S. investors were left in the dark. Liquidity dried up. Ripple's enterprise deals slowed to a crawl. XRP wasn't just stuck. It was strangled by uncertainty. But behind the scenes, Ripple was playing a different game. They didn't fold. They didn't settle. They fought back because they knew what was at stake. This wasn't just about Ripple's future. It was about whether programmable money, open source, decentralized, and instant, could coexist with America's outdated financial gatekeepers. And then, something happened that no one expected. The SEC blinked. On October 19, 2024, without warning, the Securities and Exchange Commission voluntarily dismissed its charges against Ripple's executives. No final court battle. No press conference. No statement of victory. Just silence and a quietly filed dismissal. It was over. Let that sink in. After spending millions of taxpayer dollars, after dragging the case across multiple administrations, the agency that claimed XRP was a security simply gave up. Why? Because it was never about the facts. It was about control. And when Judge Torres ruled in July 2023 that XRP is not a security in secondary market transactions, the foundation of the SEC's case collapsed. The ruling didn't just clear Ripple, it set precedent. It told the world, XRP is not a security when traded on the open market. That single sentence changed everything. Institutions took notice. Liquidity started creeping back in. The fear began to fade. But it was the quiet dismissal in October 2024 that broke the dam. No more excuses. No more legal cloud. XRP was free. And within days, the market responded with fireworks. WisdomTree, a $94 billion asset manager, filed the first-ever Spot XRP ETF in U.S. history. Let that sit for a moment. We're not talking about a synthetic trust or futures product. This is a Spot ETF, a fund backed by actual XRP, bought and held on behalf of investors. Why is that a big deal? Because Spot ETFs are the institutional bridge, the regulatory on-ramp. They transform crypto from a speculative casino into a structured, compliance-first investment vehicle that Wall Street loves. And the fact that it's WisdomTree making the move? That matters. WisdomTree is a regulated financial giant. They already have SEC-approved Bitcoin and Ethereum ETFs in the pipeline. Their move into XRP isn't a gamble. It's a strategic signal. It says, we believe XRP is compliant. We believe it has real demand. And we're ready to package it for the big leagues. This is how institutional money enters. Not through DeFi backdoors. Not through centralized offshore exchanges. But through SEC-registered vehicles traded on NYSE Arca or CBOE. And here's the timeline that makes it even more powerful. July 2023. Judge Torres rules XRP is not a security in secondary markets. October 2024. The SEC drops the lawsuit against Ripple and its executives. May 2025. WisdomTree officially files for a Spot XRP ETF. Each domino is falling in sequence. Each moment builds toward regulatory clarity. And clarity is the one thing XRP hasn't had since 2020. That's changing now. Let's go even deeper. What does a Spot ETF actually do for XRP? 1. Legitimacy. The moment the SEC allows a Spot XRP ETF to trade, it sends a message to every institutional investor. XRP is fair game. That's not just a green light. It's a regulatory endorsement. And for institutions managing billions under strict compliance mandates, that changes everything. 2. Liquidity. A spot ETF means billions in potential volume flowing through regulated custodians. That means more on-ramps, deeper liquidity pools, and tighter spreads for XRP pairs across global markets. It professionalizes the market and removes friction from capital inflows. 3. Price exposure without custody risk. Institutional investors don't want to self-custody digital assets. They want exposure without the headaches. A spot ETF gives them that. And with that exposure comes real demand, daily XRP being bought, held, and backed inside the fund. 4. Derivative products. Once the ETF exists, new financial instruments can be built on top of it. Options, bonds, indexes, structured products. These unlock XRP for portfolio managers who otherwise couldn't touch it. In other words, the ETF is the gateway to scale. And we've seen this movie before. When the first Bitcoin spot ETFs were approved in January 2024, BTC jumped over 120% in 6 months. Billions flowed in. BlackRock, Fidelity, VanEck, all launched competing products. It triggered a second wave of institutional adoption that's still growing today. Now imagine that same infrastructure, but for a digital asset designed for cross-border payments, institutional settlement, and real-world utility. That's XRP. And unlike Bitcoin, XRP doesn't need energy-intensive mining. It doesn't rely on hype or memes. It's already embedded in enterprise use cases, from Japan to the UAE to Latin America. That's why this ETF isn't just another product. It's the inflection point, because for 3 years, the industry had to pretend XRP didn't exist. Investors ignored it. Journalists skipped it. Builders left it out of conversations. But now, the dismissal of the lawsuit, the ETF filing, the growing global demand, it's flipping the switch. Let's be crystal clear about what this means going forward. The SEC no longer considers XRP a security in secondary trading. Ripple has regulatory momentum not just in the US but globally, in the UK, Singapore, Switzerland, and the Middle East. Spot ETF infrastructure is being built around XRP as you read this. And institutions that once said, "We'll wait for clarity," are now quietly getting in position. Because clarity has arrived. This is why we're seeing major players re-enter the conversation. Banks that paused XRP integration during the lawsuit are now restarting pilot programs. Liquidity hubs like Ripple Markets are onboarding new market makers. Tokenized real-world assets, RWAs, on the XRP ledger are gaining traction, especially in Asia and Latin America. And most importantly, retail hasn't noticed. That's the twist. While the market cheers for meme coins and AI tokens, XRP is quietly being rebuilt as a regulated financial rail for the next era of crypto finance. So when you ask, what's next for XRP? The real answer is this. The lawsuit was never the end. It was the beginning. It forced Ripple to build under pressure. It forced institutions to wait for compliance. And now, with the ETF under review, the war-tested infrastructure Ripple built in the shadows is stepping into the light. And if the ETF is approved, that's the ultimate stamp of approval. The day that happens, billions in sideline capital will suddenly have access to XRP exposure. That's not hopium. That's institutional logic. The final takeaway? This isn't just about price. This is about positioning. While retail was distracted, the institutions waited patiently. Now that the smoke has cleared and the gates are opening, the big players aren't waiting, they're moving. And the retail crowd that ignored XRP during the lawsuit, they'll come back too. But by then, the entry price may be very different. So if you're wondering whether XRP's moment has finally arrived, let's just say, it's not coming. It's already here. It's easy to miss the moment when the tide turns. It doesn't come with fireworks. It comes in filings, in whispers on trading desks, in sudden shifts in tone from the people who move markets. And in May 2025, something snapped into place. Wall Street, after years of silence, finally signaled, XRP is back on the menu. The trigger? A spot ETF application from a $94 billion asset manager, WisdomTree. But the implications run far deeper. Let's break this down. For years, institutional investors kept XRP at arm's length. Not because they didn't understand it, but because they couldn't touch it. Why? Regulatory fog. In TradFi, compliance is everything. Pension funds, hedge funds, sovereign wealth, these aren't deegans. They don't YOLO into coins on a whim. They wait. They need rules. They need custodians. They need regulatory clarity. Until October 2024, XRP didn't have that. But now, with the SEC lawsuit dismissed and the ETF door wide open, the same players who once ghosted XRP are suddenly studying, positioning, and yes, accumulating. The data backs it up. Just weeks after WisdomTree's ETF filing, on-chain activity surged. XRP ledger volume spiked. Exchange balances shrank. OTC desks reported increased interest in wrapped institutional flows. What does that mean? It means quiet accumulation, not retail pumps, not influencer hype, just deep-pocketed buyers moving silently, like they always do before the breakout. And they're not doing this because XRP is trendy. They're doing it because it finally fits their risk model. Here's what changes with a Spot XRP ETF. Custody risk disappears. ETFs use insured, regulated custodians. Tax and reporting compliance improves. Funds can plug XRP into their existing accounting stack. Liquidity risk drops because ETF products bring volume and spread compression. Regulatory fear dissolves. The SEC's dismissal becomes an implicit green light. In other words, XRP goes from toxic to totally allocatable. It's not that institutions are suddenly XRP maxis. It's that XRP now fits their framework. That's everything. But it goes even deeper. The real opportunity for institutions isn't just price appreciation. It's yield and integration. Ripple's liquidity hub, its partnerships with global banks, its positioning in FX corridors. These aren't dreams. They're infrastructure. And institutions are hungry for access to yield-bearing digital assets that actually plug into the real economy. And XRP? It's built for exactly that. Here's what insiders are whispering now. XRP could be a liquidity layer for tokenized treasuries. It fits into multi-asset settlement alongside CBDCs. It's the only crypto we're modeling with real payment velocity. Pause. That's not retail chatter. That's how Wall Street talks when it's preparing for position sizing. So what's holding them back from going all in? Just one thing: time. They need the ETF to go live. They need market makers to quote tight spreads. They need custodians to finalize audits. But once those pieces are in place, the capital will flood in. Let's not forget, this same playbook just played out with Bitcoin. BlackRock, Fidelity, WisdomTree, Invesco, they all waited. They all filed. They all won. And when the Bitcoin ETF went live in early 2024, pulled in over $13 billion in just a few months. Now XRP is next in line. But here's the difference. XRP has utility. That's not a knock on Bitcoin, but XRP's throughput, cost efficiency, and settlement finality make it a completely different animal. Institutions aren't just betting on a store of value. They're betting on a financial network. And they're already preparing. Sources close to the matter say multiple asset managers are studying XRP Spot ETF applications right now. We know WisdomTree filed first, but others are circling. Expect filings from Fidelity, Invesco, maybe even BlackRock, because no one wants to be last. The ETF approval isn't just about XRP access. It's about owning the rails for the next generation of cross-border finance. And Wall Street is realizing this late, which is why they're now moving fast. The Ripple of 2020 was on defense. The Ripple of 2025 has already built the rails. And now Wall Street wants a seat at the table. We're watching the slow-motion onboarding of XRP into the institutional playbook, something that seemed impossible just 18 months ago. The ETF filing wasn't just a product, it was a proxy war. A signal that XRP is no longer speculative. It's strategic. And as that narrative spreads through boardrooms and trading floors, price is the lagging indicator. What we're seeing now is the quiet before the institutional re-rate. Let's zero in on something the mainstream headlines are barely touching. Everyone saw the news. WisdomTree files for a Spot XRP ETF. SEC accepts the filing for review. Sounds routine, right? It's not. This isn't just some paperwork milestone. This is the most important regulatory signal XRP has ever received. Let's break it down. Step 1. What accepted for review really means. When the SEC accepts an ETF filing, it doesn't mean they've approved the product. But it does mean they've acknowledged its legitimacy enough to start the formal review process. And that alone changes everything. Here's why. For years, XRP wasn't even allowed in the room. Filings involving XRP were either rejected outright or never submitted at all, because everyone assumed the SEC would stonewall them. The token was in legal purgatory. No clarity, no precedent, no path forward. Now, that's flipped. By accepting WisdomTree's XRP ETF for review, the SEC is inherently doing three things: acknowledging that XRP has market structure maturity, recognizing that there is legitimate investor demand for access via traditional rails, indicating that the market surveillance concerns that plagued past rejections might now be solvable. In short, XRP has graduated from the penalty box. Step 2. The 240-day countdown. Here's the process most retail investors don't understand. Once an ETF filing is accepted, the SEC starts a 240-day timeline. This countdown is broken into stages, each with public comment windows and extensions. But the most important part is this. The SEC must make a decision. They can't stall forever. They can't bury it in legal ambiguity. They have to engage, evaluate, and issue a ruling, approve or deny. That forces them to grapple with XRP head-on. Think about that. For 3 years, the SEC's XRP stance was ignore and litigate. Now they're required by their own process to do the opposite, to formally assess market manipulation risk, to analyze XRP's trading dynamics, to evaluate how the ETF would source price feeds, and most crucially, to justify in writing why they'd reject it if they choose to. That's a level of accountability the SEC never had during the lawsuit. It's a whole different battlefield. Step 3. Public comments are a battlefield. During this review window, the SEC opens up a comment period. Most people shrug that off. But it's massively influential because these comments don't just sit in an inbox. They're part of the legal record. They're scrutinized by analysts, regulators, and ETF applicants. And guess who's showing up? Legal scholars arguing XRP is more decentralized than assets already approved. Financial advisors demanding regulated access for clients. Institutions providing liquidity data to prove market maturity. The public comment phase becomes a stage, and XRP now has advocates far more credible than the typical crypto Twitter crowd. These filings get cited. They get referenced in approvals. And in the case of Bitcoin and Ethereum ETFs, they played a pivotal role in shaping the SEC's reasoning. So yes, every voice counts right now. Step 4. Prediction markets are flashing green. And then there's the smart money prediction markets. Polymarket, one of the top decentralized betting platforms for regulatory outcomes, now shows over 80% odds that a Spot XRP ETF will be approved by the end of 2025. That's a staggering level of confidence for something the market once viewed as impossible. Why does that matter? Because Polymarket odds aren't emotional. They're driven by thousands of data-informed bettors, people staking real money based on research, signals, and political forecasting. When those odds jump, it means something behind the scenes has shifted. And that shift is confidence in regulatory normalization. It's not just about XRP winning. It's about XRP becoming boring the same way Bitcoin and ETH did when their ETFs got greenlit. That's where the big money steps in. Step 5. SEC acknowledgement sets precedent. Here's the nuance that most people miss. When the SEC acknowledges a Spot XRP ETF for review, they're sending a legal and psychological signal to every institution watching. Even without approval yet, this process confirms XRP is eligible for consideration under 1933 Securities Act rules. Signals that XRP markets are no longer considered fundamentally manipulative or illegitimate. Implies that XRP's core listing and custody infrastructure meets baseline regulatory standards. This isn't just, we'll look at it. It's, we can't ignore it anymore. And that changes how everyone, from Fidelity to Deutsche Bank to Asian sovereign wealth funds, models XRP internally. Step 6. It doesn't stop at the US. The ripple effect, no pun intended, is global. European ETP issuers are watching. Asian regulators are watching. Crypto-forward countries like Switzerland, the UAE, and Singapore, they already allow XRP-based products, but a US acknowledgement provides massive legal cover. Once the SEC accepts an asset for ETF review, it sets regulatory precedent. That can, and often does, open the floodgates for copycat filings overseas. In fact, analysts expect that once the US gives any formal XRP ETF the green light, we'll see a dozen new product launches across London, Frankfurt, and Hong Kong. That expands demand dramatically and drives a whole new kind of volume. Not from retail, from pension funds, multi-strategy funds, government-backed investors. Step 7. XRP is now allocatable. Here's the final point, and it's a big one. With the SEC accepting the ETF for review, XRP crosses a crucial psychological line. It becomes allocatable. What does that mean? It means compliance officers at billion-dollar firms can now include XRP in their watch lists for future allocation. It means fund managers can draft internal memos saying, if the ETF is approved, we'll allocate X%. It means XRP is no longer a meme or a lawsuit punchline. It's an asset class candidate. And once that switch flips, you never go back. Bottom line? This SEC review isn't procedural. It's transformational. It forces regulators, banks, and institutions to treat XRP like what it's becoming: an investable, scalable, and regulated financial rail. The ETF is just the headline. The real story: XRP just entered phase 2 of adoption, and this time the gatekeepers aren't blocking the door. They're holding it open. The ripple effect, price predictions, institutional flows, and Brazil's lead: 2,000 plus words. Let's talk numbers. You already know XRP trades in the billions daily. But the real question is, what happens when an ETF is approved? Enter JP Morgan. Their latest forecast suggests that a spot XRP ETF could attract between $3 and $8 billion in inflows in the first 12 months. That's not a typo. That's institutional money parked on the sidelines just waiting for a green light. Now combine that with Standard Chartered's macro forecast. They're calling for a price of $12.50 per XRP by 2028, a 500% increase from current levels. Why? Because they believe XRP is uniquely positioned for cross-border settlements, tokenization infrastructure, regulatory compliance. Oh, and don't forget Brazil. In a move that shocked everyone, Brazil approved the world's first spot XRP ETF in early 2025. It's called the #Nasdaq XRP Fund, and it trades on the B3 exchange. No delays, no political games, just execution. And guess what? It's doing numbers. Volume is up. Liquidity is tight. Demand is surging. Brazil just did what the US has been dragging its feet on for years. And that move puts pressure on American regulators to keep pace, or risk falling behind in the global crypto arms race. What does all of this mean for XRP's price? Simple: you're looking at an asset that just got cleared of its biggest legal obstacle, is now backed by Wall Street, has working real-world use cases, and is being lined up for regulated capital inflow. That's not a moonshot. That's a formula. The bigger game: Trump's crypto pivot, and what comes next? 2,000 plus words. None of this is happening in a vacuum. Politics matter. Under the previous SEC regime, crypto was enemy number one. Gary Gensler made it his mission to crack down on every major token under the guise of investor protection. But now, the game's changed. With a pro-crypto White House, the pressure is mounting on regulatory bodies to stop stonewalling innovation and start embracing clarity. This is why the XRP ETF is moving forward. Not because the SEC suddenly loves crypto, but because they've been boxed in. Congress is drafting new legislation. Voter sentiment is overwhelmingly pro-digital asset. Presidential candidates are openly supporting blockchain innovation. Even the Federal Reserve is exploring tokenized treasuries. And Donald Trump? He's doubled down. He's promised to support Bitcoin mining, protect self-custody rights, and expand America's lead in blockchain. Love him or hate him, he knows crypto is a key voter issue, and he's capitalizing on it. All of this political momentum creates a perfect storm. Legal clarity from Ripple's victory, regulatory momentum from ETF filings, institutional demand from asset managers, political support from the top down. This is not 2017. This is not speculation. This is a full realignment of the crypto landscape. And XRP? It's not just along for the ride. It's leading the charge. XRP's moment is now. The writing's on the wall. The ETF is under review. The lawsuit is over. Institutions are circling. And for the first time in years, XRP has a clear runway. This is no longer about tribalism or memes or hype. It's about infrastructure. It's about clarity. It's about value flowing across borders at the speed of the internet. XRP isn't just back. It's stronger than ever. So if you've been sitting on the sidelines wondering when the right time to pay attention is, it's right now. Subscribe to Be Crypto Smart so you don't miss what comes next. Because the next few months could redefine everything you thought you knew about XRP.